Okay, good morning, everybody. Welcome to today's open forum. Um, I am Ryan Langley. I'm glad to see you guys all here today. We got a little bit of a delay this morning. I was waiting to hear from Paul. It looks like Paul may not be in today, but we're going to talk about interest rates anyway. We're going to talk about what's going on in the market and what you guys can do to take advantage of it. Then we'll talk about whatever it is you guys want to talk about this morning. But I wanted to give you guys. There's Paul didn't make it in. All right, so. Paul, I just welcomed everybody to the chat here, and let's talk about what's going on with interest rates. We're seeing some movement there in positive direction incrementally. Let's talk about what's going on with that. And good morning to you.
Hey guys, good morning. Sorry about this morning. I had something come up that took me away from everything with family, so I apologize. So let's talk about interest rates. So interest rates have dropped dramatically from where they were even the end of last year. Unfortunately, in the last 48 hours with all this new tariff talk, they've popped back up a little bit, but I expect that to fizzle out by midweek next week. So if you guys are getting all my daily updates, you're seeing interest rates on conventional loans in the high fives. And FHA and VA loans are in the low fives. So that's a huge improvement from what we've seen. So we're definitely welcome to it right now, for sure. As far as the plan going forward, the 28th is the next Fed meeting. Rates are expected not to change at that point. They're already moving in the right direction. I don't see a 25 or 50 basis point cut at that point. Powell is also on his way out. There's some legal drama going on with that. You guys have probably seen that in the news. That hasn't really affected the markets at all as far as rates are concerned. But March 6th, there will be a new Fed chair, put into power. And we expect them to have an aggressive outlook on rates too.
Paul, I have some questions for you. So we saw, last week, 2 weeks ago, maybe, that inflation was down at 1.9 in one of the months that they did, whatever they reported a couple of weeks ago. And then we saw that growth was up. So they lower rates to get growth going and when they feel good about inflation. So I was excited when I saw that the inflation was down, that they might cut rates. But then I saw that growth was up. And then now it looks like inflation was right at 2 or something like that, which is like their magic number or something like that. So, which is way down from where it was a couple of years ago, but it's still like that's their trigger to not want to cut rates. And then jobs are going okay, so they don't really need to create jobs or do that. So, what effect is that having on it?
I mean, I think you nailed it. When inflation's right around that 2 number, they feel like the ship is sailing in the right direction. Right. So there's really no reason to rock the boat as far as that's concerned. So as far as the Fed is concerned, I honestly think that they're really close to where they need to be anyway. I think we have more of a supply problem and less of a rate problem, but that's a whole nother talk show. I think that those numbers will still get adjusted because I think the new Fed chair is going to be a little more aggressive on that. So I expect your April and May rate cuts to be 25 basis points each. And I assume that interest rates will level out on a 30-year fixed conventional at about 5.5% and be right around the 5% number on government. Any lower than that, I feel like is going to create more of a 2021-esque effect on the market, which is not good.
Right. It's okay short term, and then long term it bites us.
Absolutely. Yeah.
Okay, which has put us where we've been the last 2 years.
Yeah.
Okay. So what is your outlook? What have you seen recently with mortgage applications, et cetera? What kind of
It's a great question. We received more when this rate drop really started, which was essentially last week after everybody's come back from the end of the year hangover and is ready to kind of get rolling again. We had more applications in the last 3 days of last week than any 3-day period in 2024. And it was by a long shot. So our application is up. Our application count January year over year is up 47%.
Okay.
So people are out there, they're wanting to get things done. There's still a little money left in Hometown Heroes. We have a lot of other first-time buyer incentives. So the people are out there, guys. So, and they're excited and they know about these interest rates. And as far as the interest rates going up a little bit in the last 48 hours, the only people that know about that are essentially mortgage nerds and everybody on this phone call right now. So that's not really, the general public is not getting that information day to day like that.
Okay. All right. So what else have you seen? What else do you think that we could do? What programs are working for people? What have you guys been up to?
We're still dealing with this, kind of bled over from the summer of last year. We're still dealing with a lot of people that have properties to sell. So we're doing a lot of bridge products right now, but we're also seeing a lot of longer contracts where sellers, because of the fact that properties have been sitting on the market for a little bit longer, sellers are a lot more in tune with taking a longer contract period. So I have probably 5 or 6 contracts right now with March closing dates with properties to sell that we're not even doing bridge for. So I think you got to kind of just forget everything you think you know about, the appetite of a listing agent and a seller, because I think it's all changing right in front of our eyes right now. As far as other products are concerned, we're seeing, FHA conventional, VA, all that stuff is pretty much the same, but we're also seeing a lot of non-QM. So any lender that told you last year or in the past, or any buyer that's told you this, that they can't get financing, please throw that out the window. There are so many options out there for so many different reasons. We're doing a lot of sub 580 credit scores for government loans that agents and buyers don't think are available or a thing, when those agencies really have no credit score criteria. And we're also seeing a ton of DSCR and a ton of bank statement loans. More non-QM. We ran the statistic the other day, but when we looked at our non-QM for last year versus 2021 and 2022, that's up about 65%. So think outside the box, and anybody that thinks they can't get financing, jump in front of. Also, anyone that thinks they're waiting to do their 2025 taxes to be able to qualify, I see agents and buyers make this mistake all the time. Get in front of it, because the last thing that you want somebody to do is say, oh, I just need to get my 2025 taxes done. They get it done, they think they're ready, and then we look at the tax returns and we're like, these were not done right. You're not showing enough income. So if you have anybody like that, reach out to them proactively, because their accountant can give them what's called a draft before they finalize it, and send that to me. I don't care if I'm doing the loan or not. And I can look at that draft and let you know, hey, before you finalize everything, this is what it's going to do for your qualification, so they can make adjustments before it's too late.
Okay, excellent. Thank you. So that is being proactive, and that's how you don't have them put you on the shelf for another year until they file another tax, so they can qualify for something, and keeps them from renting from another year. Are you seeing a lot of renters turn into buyers?
We are, and a lot of people are really getting off the fence with that stuff now, because obviously rents have been up over the past few years, and with interest rates coming down, there was a time, right, guys, 2023, 2024, where you were always going up from what you were paying in rent to your new mortgage payment, like every single time. There was no question about it. That gap is starting to kind of shrink a little bit. So anyone that's been in that situation where there was payment shock to buy, re-engage, because with interest rates being where they're at, that can be a whole different thing too. But we are seeing more renters flip now. We have a lot of renters where their lease is up in April, May, June, July, that we didn't think were going to be on our radar, and they're filling out applications now.
Okay. Are you getting voluntary refinances now from people who don't have to because they have an arm or something like that? But or a balloon? Are you getting any kind of are you getting regular people refinancing?
Yeah, we're getting all kinds, because one thing that you guys probably saw from last year is debt is up, right? People have been borrowing more, and interest rates on credit cards are outrageous. I mean, there's certain folks in the current administration that want to cap that for a year. I don't know if you guys have seen that or not at 10%. But my point with that is we're even seeing a lot of people that are at relatively low interest rates in the threes, but they've gotten some good appreciation over the past few years, and they are doing debt consolidation loans right now.
Okay. We're pulling money out.
Yeah.
Okay. Now you don't do home equity, right?
We do home equity. Yeah.
Okay. So you do HELOCs. Fantastic.
Yep. Also, we're seeing a lot of people that have wrapped their heads around the fact that I think when interest rates were higher, people were saying, oh my gosh, I'm paying 2.5 or 3.5%. I'm never going to leave, right? I'm seeing a lot of people now that have wrapped their head around still keeping the property, but using it as a rental, because it's not easy to buy a rental property and be profitable as it used to be, right? So they're seeing that, and they're knowing, hey, family size has changed, or we really just want to be in a different area, and they're biting the bullet on purchasing now with interest rates a little bit closer than where they have been for the last year and a half.
Okay, and they can leave that loan like it is and get a new place.
Absolutely.
Yeah. So what is the changing gears here, but that made me think of it. What rates are you seeing on DSCR?
6s.
Okay. Mid 6s, low 6s, depending on.
I would say mid 6s, some between 6.5 and 6.875.
Okay. So
which has been unheard of. I mean, most people are thinking 8.5, 9% on those, and that's not the case.
Yeah. That's what you would assume.
Yeah.
Okay. Tammy.
On a HELOC loan I guess it's an investment property. Do you have to be owner occupied to take out money on an investment property?
I think what you're asking is, do you have to be owner occupied to take out a HELOC? And the answer is no.
Oh, really?
Correct. Yep.
Okay.
Yeah, you certainly have less options, but they're out there.
Do you, because I called my credit union and they're like, no, because my condo complex, it's got like 4 units in one building. They're like, they don't, so does that matter? Like how many units are in a building for the loan?
It doesn't matter. Yeah.
Okay.
So when you say there are fewer options, you mean some credit unions and stuff might not do it.
Yeah, like just like Tammy said, you're going to get a quick answer on that. They either subscribe to that or they don't. So there's just everybody that does equity lines does primary equity lines, but everybody that does equity lines doesn't do investment equity lines.
Right. So I could do a line of credit on an investment property.
Correct. Just not with that credit union, apparently.
Correct. And a few other little banks.
Yeah, a lot of them. Yeah.
So Paul, explain to everybody a little bit about what you do as a broker, as opposed to calling the bank.
Yeah, so let's just take the equity line for example, and then we'll kind of expand on that. So we have about 4 different outlets for home equity lines. So as a broker, I look at all of them transparently, and the way that loan officer compensation works is we get paid the same way regardless. So we're really truly the only section of our industry that when we look at who we're going to send something to, we're looking it out for the borrower's interest. Because if we're paid the same regardless, we have no motivation to take it from one lender to another unless they have a better option for the buyer. So that's the difference between a broker and a lender. They only have what they only have, right? So it's vanilla or vanilla. So when we can look at every single option with different companies, and this expands on conventional financing, FHA, VA, everything. So when we enter a scenario that you're giving us, we literally see every company that you've heard of and a lot that you haven't, and they're transparently ranked based on what we can offer the buyer. So we're doing all the shopping around for them.
Okay, Paul. So if I have in Tammy's instance, she's been told no by them, and now she knows that some people will do it, so she can reach out to a broker and possibly get that done. But what if, let's say I talk to a potential buyer, and they say, oh, I've tried my bank, I can't qualify. Would that be the kind of person I should send to a broker?
Absolutely.
Okay. But
yeah.
You said you've had, What is the lowest credit score thing? I think last time you were on, you said something in the fives for.
Yes. So F8, people don't realize this. This is where you don't want to get your memory fogged with stuff that's just not true. So a lot of people have heard, if I asked around right now and I said, hey guys, what's the minimum credit score on an FHA? And I got 5 different answers, or 5 answers, they'd all be different and they'd probably all be wrong. But FHA does not actually have any credit score requirement at all whatsoever. They have an automated system and it's got to get approved, but companies put restrictions on top of that. They're called overlays. Okay. So you want to make sure that what you think you know is actually true. So you're not giving up on a buyer, even maybe before you even have a conversation with them. And they say, I've got some credit problems. I have a 571, and you've been trained that, oh, you need a 580 or a 620 or whatever the heck you've been trained on. And you go, oh, sorry, you can't buy right now. That's not true. So just never think you know until you talk to me, and I'll make sure it's the right way. And even if they're not ready, don't give up on them, because I'll still pull their credit and take that cost on and give them some real advice on how long it's going to take and what they need to do to get where they want to be.
Fantastic. Tell me a little bit about your loan officers there. You are the founder of Samaritan Group. Tell me about your loan officers there. They speak different languages. Tell us a little bit about that.
Yeah, so we've got 5 different LOs. And what's good about that too is, like, depending on who you work with, because you may have somebody that you think would be a great fit for me, and then you may have somebody that may not be, right? So we're more than just me. We're an entire team. Spanish and Portuguese are the languages that we speak. We had French, but we no longer have French. So yeah, those are the bilingual agents that we have. And then we have bilingual operations too, which is huge. Sometimes you have a Spanish speaking loan officer, but there's no Spanish speaking operational folks, which kind of just defeats the purpose, you know? So we've got it connected on all ends.
Fantastic. All right, Paul, anything else you want to share with us before you go? I appreciate you coming in. I know it's not a great day for it.
I'll share. I apologize, guys. I'll send you some stuff, some good, valuable stuff too, through email today. But I will tell you a success story that we had. We had an agent call us last week that had a loan with, their buyer was with USAA as a VA mortgage, and they were told that they, at the last minute, closing day, that they couldn't get approved and they had to pay off like $45,000 worth of like debt in order to qualify, which they were doing 100% VA loan, first time home buyer. That money's just not hanging around, right? We were able to close that buyer in 7 days on a VA loan without paying anything off. So never think that the situation is the way the situation is.
Not until you pronounce it dead.
Correct. Yep. Yeah. Yeah. If I say it's done, it's done, because I also know what can be done that I can't do. So I'll at least point you in the right direction. But until I call it, don't believe it. Also, guys, if you have, I just thought about this too. If you have anybody from last year that, like, let's say you've been sending them properties and they can't find anything that they like. And part of the reason for that is they only qualify up to a certain amount, and that certain amount just doesn't satisfy what they want to see. With interest rates the way they've dropped, their whole qualification should change now. Okay. So I don't care if you call me on that stuff or not, but at least call who they were approved with before, because if they were approved in the middle of last year and rates are a half a point better, their qualification should go up 40, 50, 60 grand.
Excellent. Excellent.
So don't sleep on that stuff.
Paul, what is the best way? Mandy asked in the chat, how can we get added to Paul's email list with rates and info?
Oh, I'll just add you. If you put your information in the chat, I'll pull it off there, or Ryan, send that to me and I'll add that. Anybody that wants that, I can do, and you'll get daily rate
Paul,
updates.
Why don't I have her email you? I'm going to put your email.
Perfect. So yeah, anybody that gets added to that list, you'll get a daily interest rate update, and it'll show you, Ryan knows this, whether it's up or down from the previous day, because Ryan always tells me when I'm doing a bad job when rates are going up. And every Friday you will get an email with your entire pipeline and where it's at in the process. And it'll be broken down by active and people that are in like a nurture campaign. That's another thing about the nurture campaign is even if you're not great at keeping up with clients that aren't ready, once they're in our nurture campaign, they will be marketed until they are not. So even if you're asleep at the wheel and not following up with them, we will be reminding you when they're ready. So it's a really good way to manage your leads. And then also it'll have your pre-approvals, it'll have a mortgage calculator, it'll have a closing cost calculator, it'll have everything you need.
Fantastic. So I put Paul's info in the chat if you want to get to those. Carmen, email Paul. Paul's not, I don't think he's in the position to write all this stuff down. So email Paul, please. Paul at Samaritan-mortgage.com.
Yep.
And he will do this. And his emails, his daily emails literally come from his email address. So when you reply to them, they go to Paul and not some no reply system or something like that.
Yeah, Brian's tested that out and knows that's the case.
I tell him what I think of him all the time when I see his rates every day. It has nothing to do. That's the funny part. I know he has nothing to do with it. Paul, thank you very much for coming in, bud. If you have anything else before you go, I appreciate you sharing it. If not, that's fine.
Yeah, I will send out an email today. The only other thing I was thinking of is people that aren't necessarily ready to make the jump to talk to another lender. One good way to get around that is once they're under contract, just say, hey, take your loan estimate. I'm going to send me a copy of it. I'm going to send it to my lender. And if they can absolutely, beat it by a long shot, maybe it's worth you switching. That way you don't seem too pushy, but at the same time, you're controlling the transaction if you don't have a lot of faith in their current lender. Because there's a really good chance that we could come in and do a much, much, much better job as far as rate and cost is concerned.
Paul, two questions for you. One is, what is your method? And you just kind of hit on it right there. But when we get a client who seems to love Rocket or Wells Fargo or somebody we know is not going to close a deal, or we've seen not close deals many times, what have you found that works for agents? What have they told you to get them to go to their favorite broker instead, or someone they know is more likely to close a loan? I always tell people somebody not too small and somebody not too big.
I would say that it's very simple. I mean, when you don't like dealing with the lender, there's a reason for it, right? And I would say as a buyer's agent, this conversation should always be the same with the buyer. Look, if I don't like the way that Rocket or Wells Fargo or Bank of America closes loans, then I can promise you a listing agent's not going to like it. And I guarantee you, if you hung up the phone with me right now and you called 10 listing agents at random and you asked them what they thought of Bank of America, Wells Fargo, and Rocket, I guarantee you 7 out of 10 at a minimum are going to tell you that they absolutely will avoid working with those companies at all costs. So Mr. Buyer, Mr. or Mrs. Buyer, when you put an offer in and you're represented by me, you're already doing great. But if you're also represented by one of those companies, you're really making the only thing that stands out about your offer to be the fact that you're willing to pay more for the property than anyone else. As a consumer, that's exactly the opposite of the way you buy everything in your entire life. Why would your biggest investment be any different?
Yeah, I couldn't agree more. So, and that's, I gave you a short list and you added Bank of America too, but there's others as well.
There's a million. Yeah.
And I tell people, well, let me get you, I'll talk to them when I get you off of here. I know you got to go. If you had to say days, weeks, or months, how long until Hometown Heroes runs out?
Months. Months meaning like the end of February.
Okay. So 6 weeks, pretty much.
Yeah. Yeah.
Okay. And no, there's been no word whatsoever if it'll ever be replenished.
No, they won't. The budget comes out July 1st, and that anybody that says anything before then, there's always a lot of like rumors about it, but nothing's done until it's done at that front.
Okay. Yeah, it's one of those things that we get and then we feel like we're entitled to it now, and we'll be complaining if we don't get it.
Right.
Yeah, it's we've had budget surplus here in Florida for a while, and so they've been trying to keep the housing market afloat. That stuff wasn't around in 2020, 2021 when the market was humming for obvious reasons.
Yep.
Tammy, there's one good thing is that the state of Florida definitely knows, and it seems like the current administration knows how important the real estate industry is to the economy.
For sure.
And there's so many of us in Florida. You think about the people you know. I mean, half the people I know are in this business somehow. But I mean, of course, because I'm in the business. But I think half the people everybody knows are in this business some kind of related way. Tammy has a question.
So the Hometown Heroes program, is it just truly for the heroes now, right? It's not for everybody like it was before. Is that correct?
Correct. Yep.
Okay.
But Tammy, there's also a Florida housing program where pretty much anybody can get $10,000. Just not getting the bigger amount that you'd be getting through Hometown Heroes.
And that's needs based and has to be repaid, right?
Yep, correct. And
All
each county has their own down payment assistance too.
Okay. Plus the county down payment assistance. So there's almost no excuse. And the Hometown Heroes has to be replaced too, right? Repaid also?
Yep, absolutely.
But it's not needs based.
Correct. Yeah, they're paid back when they sell, or they refinance.
Okay. Any other questions for Paul before he goes? Awesome. Thank you so much for coming in, Paul. We'll talk soon. I appreciate it. You guys reach out to Paul. He'll put you on his emails. They are very, I mean, you're going to meet people every day. I get this thing at the same time every day from him at 9:30ish every day. I get this daily temp report, and it has the rates. Paul did not do a great job yesterday. 4 of them are up and 2 of them are down.
Sorry, guys.
Do better. So I appreciate you coming in, Paul. Thank you very much, and we'll talk to you soon.
Thanks, guys. Have a great day.
All right. You bet. Bye-bye. Thanks. Okay. Did you guys find that helpful when Paul comes in or we talk to a lender? Awesome. Kind of gives you that perspective. Guys, this is what I was going to talk to you about. I didn't want to bore Paul with it because he knows it and he's heard it before, but you guys know that Bank of America, a lot of these Rocket, the ones who take income, they're order takers, right? They're not out going to your Chamber of Commerce and coming into meetings like this to try to get your business. They're order takers because Rocket Mortgage sponsors big golf tournaments and they run ads all the time and do all that stuff. And Bank of America and Chase and all these people, they do your Wells Fargo, they do your loans because your clients come to you with pre-quals from them because that's their bank, right? They're just sitting in there taking orders. Those people who are order takers and not salespeople, those order takers get paid every Friday no matter what. Okay, they might get $100 bonus for closing a loan, right? Paul doesn't eat unless he closes loans. Paul doesn't eat unless he goes the extra mile for you. Paul doesn't eat unless he gets your client the best thing. Like he was saying, he gets paid the same no matter what. So if he gets the buyer the best deal, that's going to help you. And of course, he's doing it to help himself in the future. The buyer will come back to him, right? So if he saves the day, that looks good on you and him. And I'm not just pushing Paul, whoever your lender is. Okay. So just be, and brokers can do more, find different products and do things if you've got somebody who's not just a lay down perfect credit type person. So you will find people, you know, sometimes doctors and stuff who have a great relationship with they have perfect credit, and they have lots of money, and they're great with their credit union or whatever. That's fine. But deals that might be close, and I will tell you as a listing agent, when I see a pre-qual from Rocket or Wells Fargo or Chase or Truist or somebody, I'm very skeptical that they're going to get it done. They're not going to go the extra mile. They're going to leave things on their desk. They're not going to be in a hurry. You're going to need to get extensions because they don't care. They don't care if your client loses their $5,000 or $10,000 deposit. They don't care about any of that stuff, and they get their same paycheck Friday pretty much no matter what. So you guys know how it is. If honestly, if realtors got paid the same way, we wouldn't go that extra mile either. You know, people just don't do that. So that's that. And you guys know if you lose somebody's deposit, then they're not going to do it. All right. Any questions about anything going on with FRI? You guys are okay. Let's cover a couple of things. First, I want to tell you this while I'm thinking about it. If you sold a house to someone last year, make sure you're reminding them. It's a good time to reach out to them and remind them for their homestead exemption February 28th is their last day. Homestead exemption. It's not a leap year, so February 28th is their last day. But it's no time like the present. Tammy.
Plus, they have to jump through a lot of hoops. They have to get their driver's license. They have to have a car. You know what I mean? And so they really need time to get all of that done.
They don't want, and make sure their driver's license is updated and all that kind of stuff. Which means a DMV, which means et cetera. Depends on where you live, how much of a hassle that is.
Right.
So that's one thing. Another thing is, your 1099s. You've been sent an estimate of your 1099s by now. Everybody got one in the last couple of days. You're not an estimate. It's what we have for you for 1099 is what your 1099 is going to say. If you have any kind of issue with that, Jeanette just showed her lovely face on the screen again. If you have any kind of issue with that, you can talk to Jeanette. We'll work it through bookkeeping, but that's what we have for you in our system. There is some confusion. Let me go ahead and clear some of these up right now. If you closed a deal in late December and we didn't get the check and process it, even if you got your check at the closing table, it's going to be on your 2026 taxes if we didn't get our check and deposit that and get that all processed until 2026. So that's going to be on your next year's taxes. You can claim it. You can add it to last year if it makes you feel good and do that. But if you do that, be sure not to accept it on double pay in your 2026 taxes next year. So I would just let it ride. If it's what you have didn't get on your 2025, that's perfectly fine. The government won't know about it either until next year when you'll claim it, because we'll have it on there and you'll call us and say, I closed that deal in 2020. Yes, but we didn't put it on your 1099. You can do that however you want, but that's the way our accounting works. And that's what government cares about, is how our accounting works, because that's what we're 1099ing you for. So it's easier just to take what we 1099 you, and then because we're going to 1099 you for that deal next year, and then you can pay it next year. All right. And that way you don't have to do any explaining. There's no red flags at the IRS or anything like that. Tammy.
I'm like the star of the show today.
Every day.
What email did that come from? Because I don't think I got it.
And I was just going to say, we have a lot of emails we've been sending. There's 2 of us. We're almost done through the list.
Okay, well, I just want to make
bear
sure.
with us.
Okay.
We're about like 80% done. So if you haven't gotten it, it'll either
Okay.
come from Antonio or myself.
Okay.
Okay.
All right. Perfect. Great question, Tammy. So I'm sorry. I thought they were all done, but they're almost all done. They'll be done by the end of the week. Let her know. And because those come out next week, they will be emailed to you unless you want them mailed. Okay. Make sure your address is right on these. Also check that your address is right. Jeanette, we're sending them their address and everything too.
Yes, we're asking that you let us know whether you want it mailed or electronically signed. So
Electronically sent. Yes.
or sent, excuse me.
Carolina, contact Antonio. I will put his email in there. Jeanette, will you put Antonio's email in the chat? Thank you. Carolina, contact Antonio. He is our marketing coordinator. He can help you with any kind of stuff like that. If you guys need a resource for doing some Canva for you or something like that for an open house or whatever, a new listing, contact Antonio. He'll do it for you. A free resource we have for you here. I know we're 100%, but we actually do stuff for you. So it's fantastic. There you go. Antonio. It's the same as mine, except Antonio instead of Ryan. Any other questions on this stuff? I'm going to go through real quickly, see what we can do here. I'm going to share this a little bit. Don't worry that you can't see it yet. I haven't shared it. All right. So I'm going to blow this up a little bit more so you guys can see it better. There we go. All right. New listings. Price decrease. New listings are up. Obviously, price decreases. Not as bad as last week. I think so many people did at the end of the year. We looked at a couple of weeks ago. They said then when the new year starts, we're going to lower the price or something like that. We had tons of price decreases. Back on the market. This is the 3-day. Let me go to the 7-day. All right, there we go. Yeah, we had almost 10,000 price decreases last week. New listings, price increases, sales 2,900 pending. You see, sales were way down because people were not working too hard during the holidays. That's when that would have been closing on January 21st. But look at the pendings. The market is starting to click. The pending, and then you put back on market only 1454, pending 6220. That's a great ratio of properties that are going to be closing as opposed to going back on the market. That's fantastic as far as the market moving. Withdrawals are way down, cancels are way down. So there you go. Lots of new listings, lots of close. So we have more new listings than we have pendings or back on the market put together. So that's wonderful. Things are starting to click a little bit. And we're getting some, you're starting to see some inventory too, which is nice. That means people are selling. That means people are going to be buying, which is wonderful. That means they're making those moves that they were not making. So you guys have heard me talk about this over the last couple of years. When interest rates went up, and they are lower now than they have been in more than 3 years, when they went up, people stopped making the moves across town to just a nicer house or a little bit bigger house, or they stopped downsizing because they're going to be stuck with that loan and that for a long time. So they stopped doing that stuff because they didn't want to get out of their 3% rate into a 6.5%, 7% rate, right? But now that they're down, people are going to start moving again. There's lots of pent up demand. People have only been moving the last couple of years if they had to. And now they're going to be making those moves because they want to. And they've got a lot of pent up demand. They've been wanting to move for a while. Their kid graduated 2 years ago and they still haven't downsized yet because they were waiting on some decent interest rates. And now is that time. So we will see what happens from here, but it's very good signs right now. Very excited about it. Any questions on this stuff? All right, guys. Any questions on anything? You say you get your 1099s coming out. You're going to contact any buyers you had last year about their homestead exemption. Anything else that you guys need to talk about today? Awesome. All right. I'm going to stop sharing that and let you guys know that you can reach out to us. If you have any questions for Jeanette or for me, you can reach out to us and we'll be happy to help you. Antonio, for your marketing help that you need, and the rest of us for whatever else you need. Nothing else to talk about here today? Nobody else. All right. Awesome. Well, I appreciate you guys coming in. Thank you. It was a quick meeting, but I appreciate you guys coming in, and we'll see you next week. We'll have something amazing for you next week. Bye, guys. Thank you.